Financial education is one of the most important life skills you can develop, yet it's one that is rarely taught in school. Many Americans leave high school or even college without understanding how credit works, how to budget, or how to invest. Instead, people learn through trial and error, often making costly mistakes with debt, overspending, or falling for financial traps. In today's world, where inflation, rising living costs, and economic uncertainty are constant realities, financial literacy is no longer optional, it's essential. This video will serve as your ultimate guide to financial education. Whether you're a high school student just starting your money journey, a working class American trying to manage debt, or a retiree planning how to make savings last, the lessons we'll cover will help you take control of your financial life. We'll talk about money management, budgeting, debt, credit, saving, investing, retirement planning, passive income, and building generational wealth. By the end of this, you will walk away with the confidence to make smarter money decisions and build a stable future. Why financial education matters in America. The truth is, financial struggles are incredibly common in America. Studies show that most Americans live paycheck to paycheck, regardless of income level. Some earn $40,000 a year, others earn $150,000 a year, and yet both groups can end up broke if they don't know how to manage money. That's why financial education matters. It gives you the tools to control money instead of letting money control you. Financial education is not just about building wealth for the rich, it's about everyday stability. It's about avoiding stress when an emergency happens. It's about saying no to predatory lenders. It's about having the freedom to take a vacation without worrying about falling behind on bills. When you understand money, you're less likely to fall into high-interest credit card debt, payday loans, or risky financial behaviors. In short, financial literacy is about freedom, not restriction. Budgeting, the foundation of wealth. Budgeting is often misunderstood as a punishment or a restriction. In reality, a budget is a plan for your money. It gives every dollar a job and ensures your spending aligns with your values and goals. Without a budget, money slips through your fingers and you're left wondering where it all went. With a budget, you're in control. There are several ways Americans can budget effectively. The 50-30-20 method is a popular one. 50% of your income goes to needs like housing, food, and transportation. 30% goes to wants like entertainment and dining out, and 20% goes to savings and debt payoff. Another strategy is zero-based budgeting, where you assign every dollar a role until nothing is left unplanned. For those who struggle with overspending, the envelope system, physically separating money for different categories, can be a powerful tool. Today, budgeting has become even easier with apps like Mint, YNAB, You Need a Budget, and Personal Capital. These tools help you track your expenses, visualize your progress, and stay accountable. A budget is not something rigid that never changes. It grows with you. As your income changes, as your family grows, or as your priorities shift, your budget should adapt. That flexibility is what makes it sustainable. Mastering debt, from credit cards to student loans. Debt is one of the biggest barriers to financial freedom in America. While some debt, like a mortgage, can help you build wealth by allowing you to own real estate, most consumer debt is a trap. Credit cards, student loans, personal loans, and payday loans can drain your income and keep you stuck in financial cycles. To regain control, it's essential to have a strategy. The debt snowball method focuses on paying off the smallest debt first, giving you quick wins that build motivation. The avalanche method, on the other hand, focuses on paying off the highest interest debt first, saving you the most money in the long run. Both methods work. It's more about choosing the one that fits your personality and discipline level. Student loans deserve special attention. Millions of Americans struggle under the weight of student debt, which can delay homeownership, marriage, and even retirement savings. Exploring options like loan forgiveness programs, refinancing at lower interest rates, or extra payments toward principal can make a huge difference. Above all, it's critical to avoid predatory products like payday loans, which charge outrageously high interest and are designed to keep borrowers trapped. Credit score, your financial reputation. In America, your credit score is your financial reputation. It determines whether you can rent an apartment, finance a car, get approved for a mortgage, or even land certain jobs. A low credit score means higher interest rates, which cost you thousands of extra dollars over a lifetime. A high credit score, on the other hand, unlocks opportunities and saves you money. Improving your credit score is simpler than many people think. Always pay your bills on time, that's the biggest factor. Keep your credit utilization below 30% of your available credit. Don't close old accounts since the length of your credit history matters. And limit how often you apply for new credit, as too many hard inquiries can hurt your score. With consistent good habits, your score will improve over time, and the financial doors that open will make the effort worthwhile. Saving and emergency funds. Saving money is the foundation of financial security. It's not about how much you earn, but how much you keep. The first rule of saving is to pay yourself first. Instead of saving whatever is left after bills and spending, flip the script. Save first, spend second. Every American should aim to build an emergency fund of at least 3 to 6 months of living expenses. This fund is your safety net against job loss, medical emergencies, or unexpected repairs. Without it, a single emergency can push you back into debt. Keep your emergency fund in a high-yield savings account or money market account where it's safe, accessible, and earning more than a traditional checking account. The key is automation. Set up direct deposit so a percentage of your paycheck goes straight into savings. When you don't see the money, you don't spend it. Over time, even small amounts accumulate into significant savings. Remember, savings provide security, not growth. Investing is where growth happens, but savings protect you in times of crisis. Investing, growing your wealth. Saving makes you safe, but investing makes you wealthy. This is the truth that separates financial comfort from financial independence. Many Americans are afraid of investing because they think it's risky, but the bigger risk is not investing at all. Inflation eats away at money sitting in a savings account, but investing allows your wealth to grow faster than inflation. The stock market remains one of the most powerful wealth-building tools. Beginners should focus on index funds and ETFs, low-cost, diversified investments that follow the market. Retirement accounts like 401ks, Roth IRAs, and traditional IRAs offer huge tax advantages. If your employer matches contributions to your 401k, that's free money you should never leave on the table. Beyond stocks, Americans can build wealth through real estate, owning rental properties, or investing in REITs. The goal isn't to chase trends or gamble, it's to build long-term, consistent growth. The earlier you start, the more you benefit from compounding interest, where your money earns interest, and then that interest earns interest. That's how ordinary people become millionaires over time. Retirement planning, building a secure future. Retirement is something many Americans push off thinking about, but the reality is that Social Security alone will not cover all your needs. The cost of living is rising, healthcare is expensive, and people are living longer than ever. That means planning for retirement is not optional, it's necessary. A good rule of thumb is to save at least 10 to 15% of your income for retirement, but the earlier you start, the less you need to sacrifice later. Tax-advantaged accounts like Roth IRAs, traditional IRAs, and 401ks allow you to grow your wealth while reducing your tax burden. If you're self-employed, options like a SEP IRA or solo 401k can help you save effectively. Retirement isn't just about money, it's about freedom. It's the ability to stop working when you want to, not when you have to. It's about spending your later years traveling, spending time with family, or pursuing passions instead of worrying about bills. Proper planning ensures you can retire with dignity and security. Income, money while you sleep. The ultimate goal of financial education is financial freedom, and that often comes through passive income. Passive income is money that flows in without you actively trading time for it. This is how wealthy Americans continue to grow richer while others are stuck working paycheck to paycheck. Some common passive income streams include dividend-paying stocks, rental real estate, royalties from books or music, online businesses, and affiliate marketing. Even something as simple as creating digital products or building a YouTube channel can generate recurring income over time. The point is to shift from being 100% dependent on a paycheck to creating systems that make money for you, even while you sleep. With multiple streams of income, you're also more resilient during economic downturns. If one stream slows down, others keep you afloat. Passive income is the bridge between working for money and having money work for you. Generational wealth. Leaving a legacy, financial education is not just about helping yourself, It's about building something lasting for your family. Generational wealth ensures your children and grandchildren start life on a stronger financial foundation than you did. This begins with simple but powerful tools like wills, trusts, and life insurance. It also means teaching your children about financial literacy early so they grow up understanding how to manage money. Passing down assets like real estate, investments, or a family business can change the trajectory of your family tree for decades. Generational wealth is about planting seeds today that grow into trees of opportunity for the next generation. It's about creating a legacy that outlives you. Conclusion: financial education is not a one time lesson, it's a lifelong journey. The more you learn, the more you earn, and the more secure your future becomes. Whether you're budgeting for the first time, paying off debt, boosting your credit score, or starting your investment journey, every step you take today creates a better tomorrow. Money isn't everything, but managing it well gives you the freedom to focus on what matters most: your health, your family, and your dreams. Take these lessons, apply them, and commit to growing your financial knowledge. If this video helped you, don't forget to like, subscribe, and share it with someone who needs financial education. Together, we can build a financially literate America. Like and subscribe to New York City Finance. If you have any question, ask on the comment section. We will be available to answer you.